Good morning, everybody. 1 minute late today. Standards are slipping, but welcome to today's market opportunities live update thingy, where we take a look at the various markets. It could be a quiet day today for a couple of reasons. It's a holiday in continental Europe because it's May Day. Of course, those of us in the UK still working as hard as ever, but so the most of Europe is off today. So things like the DAX are shut, so we could see something of a quiet day. And then the major event for today is 7 o'clock UK time, when we have the latest interest rate decision from the US Federal Reserve. It's always a major event, that one. So no changes are expected to US interest rates, but as usual, it's do they make any comments around the economy? What do they say about future expectations? Can have an impact. So I think there could be an element, with Europe being closed and that announcement this evening, there could be an element of maybe sort of treading water, I think, for markets for much of today. But I think there's still interesting stuff out there. Clearly, a lot has been happening this week anyway. We've seen US stock markets again last night out to fresh all-time highs. We had Apple earnings out as well, didn't we? I must admit I didn't actually look at them, but we did see US markets lifted after the close. All right, hang on, I'm just doing a quick look at the headlines. Strong guidance and they beat earnings. Okay, so we'll take a look at Apple today, but I think oil's interesting. We've seen oil towards the end of last week, the biggest decline in oil for a while. Which is not saying much because it hasn't sold off much recently, but I think it's an interesting market. So let's start with that. I think that risk warning has been up for long enough. I've just recorded yesterday a longer video for oil, so that's going to go on our YouTube channel a bit later, maybe today or maybe tomorrow. But because it's up 39% this year, the price of oil, and clearly, it's a massive comeback since those lows that we saw in December. But let's take a look at oil, because maybe, if you fancied a bit of action today, that maybe oil is a market to watch, because of course at 3:30 this afternoon we have the weekly US crude oil inventories out. So even though European markets are shut, we could well see a bit of volatility for oil. So let's just take a look at what's going on. So we know we had this big decline for oil from October last year into December. Since then, we've seen this strong bounce back since December. Let's just pick up on that. And I think, you could argue, or I would argue anyway, that the trend, that recovery trend for oil is still very much intact. I think I've got a bit of a problem this morning. Why is that not picking up on the lines? So there we go. So for me, first of all, this is the recovery in oil. There we go. So it looks something like that. If we shove that under the lows, that's what our recovery trend looks like in oil. And you can see, if we zoom in on the end of last week, we did see a reasonable decline. The market went from above $66 a barrel, 66.5, to as low end of last week, it went as low as about 62.30 on oil. But for my money, that recovery is still intact. Okay, we've had a bit of a wobble through that trend line, but it's nothing, in the great scheme of things. A little poke through by a few cents, I don't think changes anything. So I think we've got the old support coming in from back here from early April. So early April lows was 61.62. So 61.60 were the early April lows. So for me, perhaps the trade at the moment is to take the view, well, the sell-off in oil, it's just a sell-off against this trend. We are going to see the trend resume. And I think one of the things that sparked this weakness in oil was a tweet from none other than President Trump, saying that he'd been in touch with OPEC and he told them to basically sort out the oil price. So we'd seen the price of oil get clobbered a little bit. But what I think is interesting, if we change this over to a short-term chart, so I think there are a couple of ways of playing this. I think if, like me, you thought, well, actually maybe we're going to see it spring back from here. Because for me, it's all about what's been going on with the price action over the last few days. So if we look at last week, so I can never remember what the days are, can I? So that must be Friday, 26th of April was Friday. So the market trades as low as 62.29. Then early hours of Monday morning, we see a bit of stability. The market, let's just zoom that in a bit more. The market, 10 o'clock yesterday, is it yesterday? No, Monday, sorry. Sells off a bit, but holds above Friday's low. Okay, so it's starting to look as if maybe we've got some support for oil ahead of Friday's low. And then yesterday, gets a move on yesterday, and by lunchtime yesterday had actually taken out the highs, sorry, for Monday. So for me, okay, it's a short-term level, but if it's breaking the previous day's high, then perhaps we're seeing the start of a recovery again. So that's when it starts to get interesting for me after a sell-off like this. And then we've drifted a bit today. Let me just flip this over to maybe a 5-minute chart. We've drifted off a bit today. We're having a little look through yesterday's lows. So yesterday's lows are around about 63.30. So the market has pushed down to 63.10, but it's sparked up a bit over the last hour or so. So for me, it's, well, are we seeing this weakness in oil getting turned around? So for me, we'll actually do the trade actually because it's a quiet day today. Let's place a trade on oil just to see how it pans out for the rest of the week. So for me, the obvious place for the stop, the tightest I would want my stop, is below this low from Friday. So the Friday low is 62.29, I said, didn't I? So let's put our stop at 62. So for me, that's the trade on oil. You know, we went really oversold down here on the hourly chart, at least. We have turned it around. We haven't gone oversold since then, but I'm wondering, is the price action suggesting that maybe we're going to see something of a bounce back? So let's just plonk that trade in to make the rest of the week a bit more interesting, and we'll come back to it on Friday when we do the payrolls. So let me just put my stop loss in first. So for me, actually, if you're new to trading, for me, when placing a trade, the first thing I'm going to do is put my stop loss in. Okay, so 62 is my level for a stop. There we go. I think when we do these sort of, this is real money in this account. It's not much money because it's the account I use for these sessions. But when we do these trades, I always risk, I think it's 25 quid, isn't it? So let's just knock up the size here. So we'll push that up and you can see my loss is increasing. There we go. So if I trade 21.3 of oil with a stop at 62, my risk is 25 quid and a bit. So let's do that. There we go. We're done. So we put a little trade on oil. Let's see how that pans out. But I think it's interesting. So for me, if that 62 is the level to watch, which is Friday's low, if we break 62, maybe support back down at 61.60, the lows from April. And after that, we're looking at this 58 level is massive in the great scheme of things. You know, we saw it, the price of oil in Feb, bang, bang, couldn't get through 58, same in March. And then mid-March breaks 58. The old barrier becomes support again. This is almost textbook. This, I must admit, I don't normally believe this premise that resistance becomes support when it breaks and vice versa. But we are seeing that. We did see a perfect example of that in oil on this 58 level. So for me, if we start to lose to the 61.60, then the risk is we'll see something of a deeper sell-off. But I think it's interesting. It's been a bit of a quiet week, but I think it's been interesting what the price action has done today. And like I say, we do still have a big announcement for oil this afternoon at 3:30. Those are crude oil inventories. So we could well see some volatility over that. But I thought we'd start with oil this week because I thought it looked like an interesting market. Okay, that's that done. Let's see how that turns out. What's the next market? Let's look at, as we're on commodities, let's take a look at the price of gold. It's been a bit, maybe a little bit choppy, the price of gold. But again, you know, for me, it's all about the big picture for gold. And we are still, I think, as I was saying last week in gold, we are still very much in that recovery. So there's our recovery from August last year for the price of gold, going from wherever it was, 1160, up in Feb as high as nearly 1350, and then back down near 1260 in April, late April, the other week, which held. That's, you know, at the moment, this move here looks like that move there back in November. So let's hope it goes up $150 from here. But you know, we're back to that old support. So I think gold is an interesting market down here. You know, you could argue, I think, as we were looking at the other week, that maybe if you're more patient, you want to wait a bit here, because you could argue, well, we still have this going on, this correction going on from the highs. It did go oversold on the RSI down here twice. So we went oversold there and then oversold again there. So for me, that trend is still holding, but maybe it's going to struggle with 1300, in the short term. I think that's the level we probably need to see broken. But this is where we are. Okay, so for me, the big trend is still holding in gold. If it loses, let's say 1260, then it starts to look as if maybe this trend is over. But for now, that level is holding. Let's take a quick look at the hourlies to look at some levels. It's been a little bit choppy overall. So we're, broadly speaking, we're trading where we were a couple of weeks ago, but it looks like it is trying to build some sort of recovery on the hourly charts. Let's see if we can pick up on that. So if we picked it up off here, these lows from April, it has it has fallen out of that. So we have fallen out of that recovery, but arguably, we've still got lots of support, short-term support, 1270 through to about 1277. So let's see. I mean, it needs to get a move on, but the obvious hurdle, the immediate hurdle, are these April the 26 highs, 1288. I think the bigger hurdle, if we're going to be much more ambitious for terms of recovery for gold, is 1300. Yeah, 1300, big psychological level, but also more importantly for me, it's this downtrend thing, this correction that's been in place for 2 months now. So let's see what happens. But on the hourlies, the RSI, this is a 10 RSI. So when I flip it over to an hourly chart, it becomes a 10-hour RSI. It's not done a bad job on the oversold bits of calling the swings in gold. Same down here, and the most recent one about 3 or 4 hours ago. So let's see how far this bounce back can get us. But I think maybe we're going to be struggling with this 1300 level for some time. So let's see what happens. I should say as well, for those of you watching it live, if you want to use that chat on YouTube to pop in any questions of markets you want looking at, and we'll take a look at those. Right, what's next? What should we look at next? Let's look at FX. Euro. I put this on Twitter yesterday. Let me see if I can just drag it across. Hold on a second. Here it is. So, and it was this. No, that's the wrong market. Hang on a second. It was this. Got the price of the euro dollar is doing exactly what it's been doing since November. We'll look at the real chart in a minute, but it breaks a big level, as you can see here, breaks this level, this old support from August, then it bounces back. So it looks bearish, then it rallies. Did the same thing in March, and over the last week or so, it's done the same thing again. So the euro keeps breaking lower, but there continues to be no follow through. So I think if you're trading the breaks, it's a frustrating market. But for now, at least, what's working with the euro is basically fading the breaks. If it breaks a big level, looking to wait for some strength to come in and buying back in. So we had that break last week. Let's just look at the extremes here. So we got as low as 111.10 last week. The market's 112.32 now. So we're 120 points higher over the last week. And given the lack of volatility in euro dollar recently, that's a reasonable move. 120 points or so. So we've seen this strong bounce back by the euro, and it's been pretty relentless so far. But again, if we picked up on maybe the major trend for the euro at the moment, I think it looks, if I pick up maybe on the latest bit since September last year, arguably the purest approach, if we're looking at a daily chart for euro dollar, is to look to be a seller. Look to see where this strength runs out of steam and looking to go short. So we've got, big hurdles up at 113.35. The highs from third week of March, so 1 month highs. Then bigger hurdles from 114 to 114.50. So it's going to be interesting to see just how far this recovery runs. I mean, for me, I've probably got my stop above 114.50. So if I was going to go short, having the euro squeeze a little bit higher from here would be better. for me. And I think if we do break that level, maybe we finally see this downtrend over. You know, I do think we are going to see, famous last words, the euro make a big comeback at some point. And I don't mean some point in the next 50 years. I think this year. I think the fact that, you know, things look pretty gloomy in the eurozone at the moment, with the German economy slowing down and all of that. But the fact that it breaks, but we don't get this big selling, it does suggest that maybe we're not really seeing an appetite of being massive sellers of the euro, you know. So I do wonder if it starts to break through 114.50, do we see a bigger sort of multi-month recovery in euro US dollar? So I think for me, later in the year, that'll be an interesting one to watch. But for now, at least, that trend is still down. Let's take a look on the hourlies, take a look at some of the levels. Actually, let me change the zoom on my screen just to make the axis a bit clearer. There we go. So here we go. This is that. So that was the move. That was I think US GDP numbers came out on Friday of last week, I think it was. And since then we've been recovering, you know, in euro dollar. So so for now, at least, that trend is still up, you know, looking, I don't know, something like that, let's say. There we go. It's doing a good job so far. So that's the trend over the last 3 days. We've, you know, next obvious hurdle, 112.60-ish up here. The highs before it went to new multi-year lows again. So let's see what happens with euro dollar. But for now, at least, the pressure does seem to be on the upside. While we're on the subject of the euro, before we look at the pounds, let's look at the pound. Then we'll look at the dollar index after. Let's look at the pound. We had some UK data out this morning. We had UK manufacturing PMI out this morning. I think it came in a little bit better than expected, but down on last month. So it's lost a bit of momentum. I think, like I've been saying for a while on the pound, I think it's a tricky market to trade. It's pretty choppy at the moment because everything's Brexit focused. So it's very, very vulnerable to shocks. But we've seen over the last week some pound strength coming in. You know, big level on the dailies, about 127.80. Good run. Well, we've seen a 200-point recovery since last week's lows. Let's take a look on the hourlies. So it's still very much strong going into today. So we're now at the highest level on the pound for a couple of weeks or so since mid-April. You know, we got big problems coming up potentially. Sort of 131.30, so 50, 60 points above here. So maybe, you know, particularly after a rise like that, maybe we'll see some pressure coming. But that's the pound against the dollar. But like I say, something of an odd market. Let's take a look at this dollar index, and then we'll get into stock markets. So this dollar index, so it's always an interesting one to watch. It's again, I've mentioned it a few times in the past. So on our platform, it's DXY, but it's the US dollar against a basket of other currencies. Okay, so it's against the euro, the Swiss franc, the Canadian dollar, the pound, the yen, all that stuff, in various percentages. And I think what's interesting, we did see a breakout last week. So the US dollar, let me just take this back. So the US dollar index last week hit its best levels since May 2017. So we had almost 2-year highs on the US dollar in April. And I said I've got a long-term sort of position on the US dollar, and I added to it last week on the break through 98, and of course since then it's just been going down. But I think it's interesting. So for me in the US dollar, and it runs back to that euro chart, you know, for me in the US dollar, it's broken out to new highs. I would be waiting for some strength to come in, and I would be looking to be a buyer. So from a trading point of view, this break is positive. Whether it's a false break or not, we don't know yet. But I think let's see what happens. And clearly today is a big day for the dollar index because we've got the US interest rate decision this evening. But you know, the support levels I'll be watching, these March to April lows. So 96.70 is the April low, 95.70 near enough is the March low. Let's see what happens. But I would be expecting, fingers crossed, some buyers to come back in on this. So so let's see. So but as I say, 7 o'clock tonight, US interest rate decision. So FX might be a little bit quiet. Okay, next markets. Next markets are, of course, stock markets. Here we go, S&P 500. Let me just have a quick look at something. Hold on a sec, S&P. You can see, look at this on the right hand side. This is not something that's unique to our clients. You know, lots of brokers these days let you see market sentiment, let you see which way their clients are trading. Yesterday, the S&P 500 hit fresh all-time highs. On these sessions, we always bang on about the importance of trading with the trend, blah 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 blah. All this year, stock markets have gone up. Which way are most people positioned? I think you can see that 60% of people who have a trade on the S&P are short, and this is a big reason why so many people lose money trading. You'll see this if you happen to trade, have an account with somebody else in addition to us. You'll see this, you know, on other platforms as well. I can almost guarantee you that the balance will be in people being short the market. Okay, and let's just remind ourselves, this is what this market looks like. Yeah, we've had this year maybe 2 or 3 days of the market being down, but yet again and again in the overnight market, the S&P 500 is pushing to fresh all-time highs. You know, so for me, in a market like this, you could be looking for buying opportunities. You're not trying to be, Johnny Smartpants and call the top. You know, we want to position ourselves to be a buyer if we see any weakness. So that's where we are on the S&P. Like I say, the DAX is shut today because of the May Day holiday in continental Europe. So there's the S&P. You know, what can you say? Breakout, all-time highs, blah blah blah. It's very overbought. You know, we've been dipping in and out of overbought for the best part of 4 months now, which is not surprising given the strength and the fact we seldom get a half decent sell-off. So going into today's session, again, expecting it to be pretty quiet until we get this interest rate announcement out of the way. Yesterday was a bit of a messy day actually, because we did see something of a sharp sell-off in sort of the second hour of trading. So the market got knocked back to the lows of a couple of days ago. But again, you can see, just look, this shows you, I think, the importance of trading with the trend. Just look at the turnaround. The market goes to 29.25, and then by the end of the day, finishes off 20 points higher. And then in the out of hours market, we had those Apple earnings. We'll have a look at Apple as well. It's blasted higher again. Okay, so what can you do? What you can do is look to be a buyer and not try and short sell it. So again, going in today, if we had any shocks today, the obvious levels to watch, I think that the lows from yesterday, maybe we'll get some volatility off this interest rate decision. After that, we've got bigger lows ahead of 29.10 from last week. Then after that, there's so much support left in this market. We got big levels all the way back. Yeah. So for me, where do you think it's going to go? Well, I think we're going to see all-time highs again at some point, not too soon. And any sell-off looks to be something of a buying opportunity. Let's take a look at the Dow, then we'll do the Nasdaq, then we'll have a quick look at the DAX, even though it's closed, and then we'll do the Footsie. So there's the Dow. Interestingly, the Dow has not quite yet broken out to fresh all-time highs. So the Dow, we're still way below actually. If we look at the Dow highs were set in September last year, up around 27,000. So we're still a little bit below those all-time highs. But again, like the S&P, it's a market that continues to get dragged up. When it gets knocked back, you see buyers step back in and just lift this market higher again. So again, going into today, if we did have a bit of a shock off the back of those interest rates, we've got lots of support building from 26.3 over the last 2 or 3 weeks through to 26.4, yesterday's low. And we're currently trading just below 26,700. So let's see what happens, but for me, the default position is to be looking for buying opportunities rather than trying to call the top in a market like this. And the Nasdaq, so look at the Nasdaq. Then we'll bring it over to European markets. Here we go. Nasdaq again. Here we go. 63% sellers on the Nasdaq. So everybody trying to call the top. Let's have a look at the dailies. Here we go on the dailies. Let's get rid of that. So it's been sort of banging its head a bit for the last week. We had a little nudge out to all-time highs in April. Not much progress since then. So I suppose if you absolutely definitely had to short sell the Nasdaq up here for some peculiar reason, you do at least have an obvious reference point to set your stop loss. And I'd suggest it's that all-time high from late April, around about 78.60, 78.70, somewhere above there. So for now, that's where we need to break, 78.70, let's say. But again, big support, 77.20. But a little bit sideways the last few days, the Nasdaq. Let's see what happens today. Quick look at the DAX, then we'll do the Footsie, then we'll have a quick look at Apple, and then we're done. I'll jump into the questions. So there's the DAX. As I say, the DAX is closed today because of the May Day bank holiday. But again, still strong. There was a good trade this week, and I remember it because I did it, and we talked about it on Monday. Where was it? Let me go back. Let's go back to Monday. This was it. This was Monday. So I remember we did the thing on Monday, and we had Monday morning. By 9 o'clock, the DAX had moved out to fresh highs for the year so far. So that was really positive. And when we did this session, we'd have been about here. We'd have been about 12,300 on the DAX. So we'd seen this massive turnaround on Monday of about 80, 90 points. And I said, well, maybe it's a buying opportunity. And the levels to watch were the lows from Friday. The lows from Friday were 12,270. And then we had lows from Thursday at 12,250. So I did end up buying it. So I ended up buying it 12,280, I think it was. And I put, because I'm a bit conservative, I put my stop loss the other side of the Thursday low. So my stop loss was down there. So my stop loss was about 60 points away. So I've got a rule for stop losses. The market's got to move my stop loss distance plus 50% in my favor to move the stop. So I was looking for pretty much like a 100-point move or something like that to move my stop loss. So I've been in at 12,280, and it was really frustrating because the market pushed higher, and I thought, oh, what a wonderful trade this is turning out to be. And then by the end of the day, it pushed as high as about 12,350. So I was about 70 points in profit, but I hadn't hit the level where I was allowed to move my stop. But I thought it's going to be fine. We've seen a strong finish. The next day, we're going to blip up, and I'm going to move my stop. What happens yesterday, the market just goes crumbling back down again. We get this gap open and goes back to where I'm only like 20 points in profit. Then yesterday afternoon, I'm basically back to break even. So I'm still in the trade, but I've given back all the profit. But I think what's interesting here is you did have a second bite of the cherry yesterday. We got knocked back again, not quite to the lows of Monday, but knocked back again. And then finally last night, it did push higher, and I have moved my stop. So it sold off in the last hour of trading. It's not open today, but if it was open today, because the US market has pushed a bit higher, I think it's trading about 20 or 30 points higher. So I'm gonna have to wait till tomorrow to see how that's performing when the DAX reopens. But I thought that was really interesting. I think it's a really good opportunity from Monday, where we had seen clearly a positive start. Whatever happened, I can't remember what it was. Get knocked back, some obvious levels for stop losses, and it's worked out well. If only every trade was like that. So there's the DAX. So it's still strong. Market's shut today. If US markets stay reasonably positive today, when the DAX reopens tomorrow, we should see it opening near 12,400. Clearly, if US markets go crashing down, we'll see things reverse. But let's see what happens. But still really positive, the DAX. And then finally, the Footsie 100. So the UK thingy. I'm guessing because we've seen a bit of pound strength this week. That won't have done the Footsie any favors. It's interesting, this, isn't it? Look at how the Footsie is lagging a bit. I wonder if that's a combination of the pound being stronger, which impacts the Footsie, and also maybe the weaker oil price hitting some of the big oil companies like Shell and BP and the Footsie. I don't know the reasons, but going against what the US market's doing. But again, I suppose it's still tradable if you really fancy it down here. I think we've got these big levels left from mid-April. Lots of Footsie support running from 73.70 through to 73.90, and we have seen all last week the market turning around the 7,400 mark. So it's quite odd. I must admit, I never look at the Footsie normally during the day. I do think if we're looking for volatility, the US market's the one to watch, and then the DAX, and I just don't trade the Footsie. But I think it's interesting that it's not being pushing higher with other markets this week, but we do have a floor from 7370 through to 7400. So let's see. That's it, isn't it? Oh, we'll have a look at Bitcoin, then I'll get into the questions. So how's all my little trades doing? How's my little oil trade doing? Oh, 33p already on oil. Oh, 16p. There we go. So Bitcoin, then we'll do the questions. What's Bitcoin? Bitcoin is moving. We did buy it the other week, didn't we? Okay, good. So Bitcoin looks like that. So just to remind ourselves, I'm not a fan, as I said before, really of trading these cryptocurrencies because they're just lunatic markets. But I think it's interesting. The move we saw in April took out so many levels, so many resistance levels, and the fact, as with other moves, it hasn't just fallen back off a cliff again. And we're seeing, I think this looks like the best chance Bitcoin has had for many months in staging some sort of half decent recovery. So, support at 4,700, deeper support down here, obviously, but left at 3,600. Short-term target 5.6. If we can break 5.6, it doesn't seem too ridiculous to start gunning for the 6,500 level for Bitcoin. Let's see what it brings. But holding on to that break higher so far. So markets to watch today, like I say, just with the proviso that Europe, continental Europe, is shut. So maybe a bit quieter, and we also have that US interest rate decision tonight, so maybe that's going to be quiet as well, but 7 o'clock is when that comes out. But I think oil is maybe the more interesting market to watch, given the volatility over the last few days. Can we see it start to build some sort of recovery from here? Right, let's get into the questions. Silver, let's have a look at silver. We did look at that earlier this week, didn't we? And it's been an underperformer, hasn't it, versus the price of gold. I think that trend was still down. Trend is down. Which way are people positioned? Of course, most people are trying to buy it. So let's bring that up. The silver chart. There we go. So that's what it looks like. I think I can remember, if you go right back on silver, back to 2017, there's almost an argument for, there we go, for that sort of thing, isn't there? Ish. You could argue. Well, we've had since April 2017, so we're 2 years into this, that trend for silver has been down, and we had this quite exciting recovery from November, but it ran out of steam again just above 16, and we've turned lower. So it still looks weak. It still looks weak, the price of silver. I think it would be interesting if we get back to these old lows from September and November last year. So around about 14, we're currently 14.91. So if we slip a bit further from here, maybe it gets interesting, because this was quite a base back then. But for now, still under some pressure, isn't it? I would suggest the price of silver, and we could even pick up on a shorter term thing. Looking, so I don't know, something like that. I suppose it's a bit messy, but yeah, still under pressure, and arguably the line of least resistance for the last 2 years has been down. Let's see. Whitbread, so the US stock Whitbread, the owner of Costa Coffee, I think, aren't they? Whitbread. It's been up 1.25% today. Let's bring that one up. That's it. What would we say about Whitbread? So I think if you're looking at price action, it's quite gappy, isn't it? That must have been on results. Let's pick that up. So we could pick up on our recovery looking something like that. So look at that. Right. See, Nicholas, I knew this was going to deliver this. I knew there would be something interesting because you flagged it up. It is interesting, isn't it? So we've had this recovery for a year now, in Whitbread, chugging along, bang, 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 away we go, and then clobbered yesterday. So if anywhere the trend is going to hold, then we are here. So again, it's one of these things where you look back at it in 6 months' time and say, I should have really bought there when it was right in the trend line. So we're back to the old support. Maybe the safer trade is to wait, or the safer investment is to wait for a couple of days, see what happens. But we have big support running from the October lows around about 42.70, 42 pound a share, 43 a share. We're currently trading at 45, off from 52 just a month ago. If that trend is going to resume, then we are here. Yeah. So let's see what happens. But I'd be looking for the bounce for here. You know, we did have a downtrend for quite a while in Whitbread, and it's turned it around. So there we go. Oh, Apple. I've reminded myself to look at Apple. And then we'll get into the other questions. So let's have a look at Apple. So Apple had numbers out last night. Let me remind myself what they said by doing a quick Google even. March quarter earnings were in line with expectations. Guidance for the next quarter was higher than analysts expected. Blah, blah, blah. The stock rose sharply in extended trading. So it jumped 4% last night, Apple. I think they said that a third of their income now is from services. So whatever that is, Apple Music, the cloud stuff, rather than the hardware. So here we go. So this was Apple at last night's official close. It's a bit like the crude oil chart. Let's pick up on the trend for Apple to see what we should be watching today. So we've had this recovery going on since the lows, the 140 lows in Jan. So again, you're looking at that trend, we would want to be a buyer of Apple. So we've seen it pop higher last night. So pop to about, I suppose about 210 last night. Then if it was up 4%, we're trading around there. That trend is still up in Apple, you know. So for me, the big level, short-term level, 195 a share, plus the trend line. Let's flip it over to the hourlies. So I think that'd be an interesting one to watch today, the Apple share price. But you can see that 195-ish support. But yeah, suggesting it's going to open maybe about here today. Let's see. Right, back to the questions. Sirius Minerals, worth a go. Oh, I don't like these crazy little stocks. Hang on, how before I completely have a go, how big are they? Sirius Minerals, here we go. Let's have a look. Am I doing them a disservice here? And they're actually got like a 3 billion market cap or something. Sirius Minerals, hang on a sec, I'm just looking on another screen. 780 million market cap. Okay, they're not tiny then, but you know, these penny shares, they're just not, I mean, we haven't got much data on Sirius Minerals. All right, so what I'm going to do, I'll bring it up on another application on ShareScope. Here we go. So clobbered yesterday. Look at that. I mean, just this volatility. I mean, they're a bit not serious themselves, you know, but I think these stocks that move with this sort of volatility, these mining stocks, it's a bit like a roulette wheel, isn't it? But you know, the trend for Sirius into whatever happened over the last couple of days, I think from memory, they're raising money for something. I can't remember, but the trend had been down, you know, since August last year when they were 39p a share, and they're 16p a share. It looks like today. I mean, we've got, you know, we're on the lowest since whenever. Clearly, at some point they may well snap back, but I would suggest that's one for the brave. I think that one. I can't really add much to that. So good luck with it though. And dollar yen and sterling yen, the old favourites. Let's bring those up. So we'll go for let's do sterling yen first of all. A regular one on that. So we were looking at this week, and I remember saying we should be a buyer from Monday. I don't just make this stuff up. You can go back and check Monday's recording, and we have seen it. We have seen it rally. Big move yesterday. Clearly, that big move in the pound yesterday. I remember we were looking at the 4-hour chart, weren't we? On Monday. It was Monday's date, the 29th. So we were about, what was it, 10 o'clock on Monday. So in here somewhere, 144.50. So it's been really sideways, sterling against the Japanese yen over the last couple of months. But clearly 144-ish, you know, has been a floor, you know, and we saw it get pushed back to that level late last week, and we've seen the market push higher this week. So it's banging around in this range. So at the moment, that still looks pretty strong to me, doesn't it? We've got that strong run for the pound going on. It's an interesting level coming up right about now, 145.60, 145.70. Maybe there'll be some stops above there if you can push through there properly. You know, maybe we'll see a little bit of a push higher again from here. But I think it's one of those where if it's let me make it an hourly. If it's in the middle of the range, you know, if it's like there, 146, you don't want to do anything. But at these extremes, they have proved to be good areas, haven't they? So we're sort of bang, bang, bang sideways, but getting in on the extremes as Monday has been a good opportunity. And then dollar yen, and then I think we're done. If there's no more questions, we're done after that. So dollar yen. We don't look at this one very often, do we? But let's have a look. Let's bring it up on a daily chart. I'm guessing we're seeing a bit of a slide because the dollar is sliding over the last few days anyway. There we go. So dollar yen. So it has been a bit of an odd one because we had that weird spike in plenty of pairs against the dollar beginning of the year. But let's see if we can pick up on some sort of trend since then. There we go. Look at that. So that's where we are at the moment. So I mean, the dollar did push higher against the yen in the third week of April, but we didn't see any follow through, did we? So broadly speaking, we've not seen much progress over the last couple of months. But there could be, I think if you really wanted to, there could be a trade coming up. If we change this over to an hourly chart, so forget about that trend for now. But we have these old lows. They were pretty important. April Fool's Day, 110.80. April the 10th, 110.85. We're currently about 50 points above that level. So I think it's maybe interesting down here. If you wanted to be a buyer of the dollar against the yen, it'd be interesting to see what the reaction is tonight when the interest rates come out at 7 o'clock, and maybe when the dust settles after that, it looks a bit interesting. So for me, I'd be tempted to be thinking about being a buyer with stop losses initially the other side of 110.80, but I'd wait it out till maybe tomorrow or later on this evening and see what happens if it drifts back down to 111. So let's see. Oh, someone's asked for the ASX. I'm guessing that is the Australian, isn't it? The Australian index. ASX 200. There we go. I can categorically say we've never looked at this before. Let's flip it over to the dailies. This is an interesting one, isn't it? I suppose actually, like US markets, it is just about trying what it has sort of scraped out by the looks of it to fresh highs. Is that fresh all-time highs? I'm guessing it is. Yeah. So fresh all-time highs on the ASX. So for me, as with all these stock market indices at the moment, any weakness looks like a buying opportunity. Like US markets yesterday, a bit of a sell-off early on. And there we go. Exclusive. Ferry companies will still be paid despite Department for Transport cancelling no-deal Brexit contracts. Great bit of government negotiation there. So we saw this sell-off yesterday, as we did in US markets. But again, I think, for stock markets like this, we want to be a buyer on any weakness. If we pick up on the trend, this recovery, the latest bit of the trend, maybe I should say, since March on the ASX, still be going. We've got big support, 62.40 through to 62.80. So again, I think for me, for now, the default position would be to look to be a buyer on weakness. So there we go. So a lot of markets done, isn't it, today? So that's it. So I think, like I say, a quiet day today, maybe because Europe shut. The US interest rate decision at 7 o'clock tonight. The next session we do is Friday 1:15 UK time in the afternoon, because it is non-farm payrolls. So US unemployment numbers, major announcement this Friday. So you're normally guaranteed a chunk of volatility off the back of that. So that's on Friday. To never miss out on the stuff we do and the other sort of pre-recorded videos, just make sure you're subscribed. If you click that subscribe button down there and the little alarm bell notification thing, you'll get a push off YouTube when we go live. And if you can click on the thumbs up thing, because it helps our YouTube algorithm, even if you hate it, click on the thumbs up. And we'll do it all again on Friday at 1:15. But any questions, you can drop me an email, david.jones@capital.com. Thanks for coming along, and hopefully see you on Friday.